Hello everybody. Name's Boss, Joe Boss, and welcome to the stream. We're going to be going over some FX analysis for the week ahead, using some of the tools that I built. Alrighty. Let's hop on right into it. Let's not waste any time. So right here, I just got a blank chart with some indicators attached that are hidden. And let's see here. If anyone's in the chat, you can go ahead and say, hey, give some requests. Usually these streams have pretty low concurrent viewer count, but hopefully as more streams are done week to week, day to day, we'll start to see more people. I'm very happy to see that the last stream that I did, walking through some of the indicators that I've built, like range probabilities, actually the last stream I did mostly focused on this probability pivot points indicator. Let's see here. Let's turn on some other relaxing music. There we go. All right, I'm in the mood to start this off. So yeah, in the last stream, I covered a walkthrough on how to use all these different indicators in this new one, my most recent one, probability pivot points, which is just an upgrade of some of my prior work, a quite significant technical upgrade. And it'll be replacing that older work. So, as we're going to be doing some analysis for the week ahead here, and the new week just started for the FX assets, let's go ahead and check out some weekly period time frame analysis stuff. Let's sort this by percent change. Everything is relatively flat right now here at the open. Alrighty. One of the things that we do in the trading group is we look at a bunch of outlooks from institutions. And there is a common theme from those outlooks, especially over the last 2 weeks, that the US dollar is probably going to continue weakening into the end of the year. Now, relative to what currencies is going to depend on the country, right? Like, for example, if we're looking at the Australian US dollar FX pair, the AU, the Aussie dollar, Aussie Dixie, this particular currency pair has actually some interesting bullish potential. The RBA, the Reserve Bank of Australia, is more likely to continue hiking. They're one of the few G7 central banks that actually is still hawkish. Unlike, let's say, the Bank of Canada in the USD CAD exchange rate. And yeah, they're not expected to hike. I'm reading stuff from BMO and RBC. It's not looking good for Canada. I think I was reading some stuff on their housing market the other day. Housing prices probably will hopefully start coming down in Canada over the next 6 or so months. Apparently more supply is going to be coming online. And the other bank, the other central bank, G7 central bank, that has a similar policy to Canada's is New Zealand. They're not expected to do any more hiking. However, they do have their central bank meeting this week. Heyo, Taj. Nice to see you. So yeah, I'm looking at these distributions and I'm seeing, okay, there's definitely some far out peaks here if you want to target some dollar weakness across some of these FX pairs. But it's not just the dollar weakness that has to be looked at. In an FX pair, you have to take into consideration the other side of the pair. And in this case, it's the New Zealand dollar. So let's kind of go top down. Let's actually just look at the DXY, the index standalone. This is a mix of a bunch of assets. This is mostly the euro against the United States. That's what makes up most of the DXY index. So we can also look at euro dollar, get our distribution for that. Good stuff, good stuff. And you can actually see it kind of looks like the inverse of the DXY. Not exactly, there are other factors that impact the DXY, but euro dollar is the major factor. So net, let's just look at the DXY. And if the expectation is still directionally bearish, as far as the expectations from institutions, then I wouldn't be surprised to maybe see 103 get reached sometime this week. I saw forecasts like in the 102 range here on the dollar. And for you guys on mobile, let me go ahead and make the chart just a bit bigger for you guys to see. There you go. Go ahead and expand this little axis here so all the labels aren't bumping into each other. So what I'm interpreting right now is that you have a, just for simplicity's sake, I'll break down what these red and green colors are. The red is your distribution of high data for a given week, and the green is your distribution of low data for a given week. So this goes back as far as possible. The indicator collects as much historical data as TradingView will allow us for this time frame, the 12-hour, and finds where a week bottomed out, where a week topped out, and it draws these distributions for us. And you can see we have these individual little peaks, clusters of data in our distribution. And these little individual labels tell us the density of the probabilities at those particular spots. So if we are setting expectations, okay, dollar's not necessarily so bullish here, then we can look at peaks where the valuation favors bears. When I look at these distributions, I'm going to look at this high right here, this distribution of high data points. And you can probably characterize each one of these separate peaks or clusters of data as different regimes. And what I mean by that is bullish and bearish data can be characterized by these different peaks. So maybe during a bearish week, you top out closer to the open, which would probably represent this set of probabilities. Maybe more during a range-bound or bullish week, you get your high for the week around this set of data points, around 104 actually, which would be against the expectations of all these different market participants. And then you have this far out peak right here. But you can see there's a 75% line. This just says 75% of tops occur below that line. Same thing with here, 50% of tops occur below that line. 25% of tops occur below that. Those same lines exist down here for the low data. But when looking at the distribution in these individual peaks, we can probably describe the data that occurs up here as especially strong bullish highs. So maybe this is during some major economic event that's particularly strong for the dollar, or maybe you get some significant weakness in the other G7 foreign exchange currencies, FX currencies, and you end up with a much stronger dollar, people fleeing to a risk-off safe haven. Dollar is described as that. So you can look at these individual peaks and figure out, okay, if I have bullish or bearish expectations, maybe I should set what price I look at and expect to hit based off this tool to help me with valuation. So, with that in mind, let's look at our low distribution. Because we have some bearish expectations, let's assume that maybe the top potentially already came in. I'm not totally sold on that idea. I still think for the next 1 or 2 trading days of November, until we get into the first 1 to 3 trading days of December, that maybe we see some more sideways action on the DXY. So maybe I'm not anticipating any sort of dollar weakness directional move until the latter half of the week. So maybe I hold off on looking at taking trades right here, right now, until a more opportune time. And note, around Wednesday, Thursday is when we start to get a bunch of economic events releasing. Make sure you consult your economic calendar to figure out when those events are occurring, how important those events are, and what currencies are impacted by those events. So just looking at this distribution, when we have bearish expectations, I might look to target this peak right here. And this is around, call it the 103 to the 102.8 price range. So that's maybe, if I'm a bear and I have bearish expectations, I might value that spot as where I should expect my low to be, discretionarily. So with that in mind, now that we've done the DXY, let's go down some of these FX pairs and maybe we'll do some commodities. So right off the bat, let's look at the dollar CAD. Dollar CAD had a nice move lower in the last 12 hours. Excuse me, of the last trading week. I wasn't expecting that. You can see we have slightly wider peaks here, and then a pretty wide, long, moderate tail here, and then this is kind of where we get our tail risk scenarios. Right around that price of, call it 138.8, which is quite a ways away. But I have no expectations to anticipate any sort of crazy volatile move that would make the dollar get so strong so quickly. Remember, this is the dollar CAD, so when this chart goes up, the dollar is getting stronger against the Canadian dollar, and when this chart goes down, the Canadian dollar is strengthening against the US dollar. So if I still have dollar bearish expectations, I'd expect this chart to go down. And if I'm explicitly more, let's say, bullish on the Canadian, even though most FX dollar prices are really being driven by the US dollar leg right now, so it's important to do the analysis on the dollar. with the current set of expectations that I have and what we did on the DXY chart, I'm probably going to have some expectation of reaching this peak in the distribution sometime maybe around Thursday. Call it the mid 135s price range. So this peak is roughly between 135.6 and call it 135. And then you have this uniform looking segment of the distribution where all these histograms look flat and all the odds are pretty marginally the same value within about 1% of each other. If the USD CAD price started moving down to around here, it becomes more of a guess as to where exactly the low might be for the week. Whereas maybe some shots can be taken around here, and maybe you stop out there, depending on how bearish you are on the US dollar. All right. Let's move on to the next chart. Let's go to the dollar yen. You can see we have some more defined peaks here. And wow, yeah, look at that. That gets you get very small odds very quick. You get a little bump in your distribution, but that's still a pretty low density of probabilities there. And then this is where you start to see your tail risk come in. Yeah. So from what I understand, the Bank of Japan is still on a looser end of their monetary policy, but this nice pullback over the last 2 weeks has certainly helped curb some of the expectations that the Ministry of Finance in Japan will do some forex intervention. And that may be the US dollar leg of the dollar yen pair will continue to weaken and alleviate prices in the yen. Once we get out to the first quarter of 2024, we're going to have new policy from the Bank of Japan, and the expectations around the first quarter of next year is that they're going to end their loose monetary policy. So people are preemptively setting out forecasts in 2024 for the yen to appreciate significantly against the dollar yen. In our case, if we still have especially bearish expectations this week against the dollar, that might contribute more to the movement of this currency pair than the yen part of it. So if I have those expectations, I'm probably going to look for this peak down here to get hit. Call it 148 to 148.5. And hopefully that's clear on how to interpret this indicator. And I'm going to pull up the probability pivot points here. I'm going to look at the low seasonal data, where range probabilities went back all the way in history and collected as much historical data as possible to give you the general distribution for where your tops and bottoms come in for the week. This indicator uses seasonal data and pivot points to identify generally between which two pivots a low or a top or a close could come in for the week, the month, or the quarter. And looking at this, I mean, it's arguably easier to read than range probabilities, but it uses different data. And the seasonal data here clearly says 52.38% of the time the low for the week on dollar yen occurs between this 148.3 and 147.7 location. The S0.5 and S1 pivot points. These S0.5, S1.5, R0.5, R1.5, those are midpoint pivots. And those can help with binning the seasonal data. So then we know, okay, is this closer to the S1 pivot? Is it closer to the central pivot? Is it closer to the R1 pivot? Is it closer to the central pivot where we got those seasonal highs and lows? So looking at this, oh, and I just added this feature here. Between this video and the last video that I did just a day ago, I added a small new feature called the probability weighted pivot. And actually, if you're curious about what any of these features mean, once you have the indicators, there's a 10-day trial for all these. So if you just want to play around with them, no obligation to purchase them, just get a 10-day trial. There's a setting here for the probability weighted pivot point and tooltips for all these settings to describe what they do. And that probability weighted pivot just takes those probabilities that are being displayed and uses those as weights against every single pivot point to create a probability weighted pivot. And you can see it's kind of just past that S1. It's probably getting pulled by some of these further numbers here. So it's just below that S1 pivot. So yeah, I have more reasonable expectations now that the value of the low for dollar yen this week is nominal based off what's the highest probability from this indicator using the seasonal data, that the low this week probably occurs in this area. If I go back and I also turn on the range probabilities indicator, you can actually see a bit of overlap. And while the pivots can give you sometimes these 50 pip ranges, see how that's like 57.6 pips between those two pivots? Instead of having to deal with that wider range to figure out where to get in on a speculative discretionary trade, let's say long here, or an exit on a short trade, we can use range probabilities using all the historical data to say, okay, maybe this area right here closer to the S0.5 pivot is a better set for our expectations of where the low this week might come in. And hopefully that's helpful. So let's see. We got any comments from Taj? Gonna grab another sip. I'm drinking this Body Armor Cherry Lime. I love this stuff. Maybe not that particular flavor, but I'm always trying out new things. Okay. Now, we can see the pivots and the ranges for the next week or the next period. We just toggled this little setting on. But you can see we have very little data currently this week. And that's not necessarily making the next week's pivots easy to read. They're very, very tight. As we get more data for the rest of this period, those pivots will contract and expand and look more normal as we get more data throughout the rest of this week, because those next period's pivots are dependent on the data we currently have. And as this week closes out, those pivots will be set in stone. And when we do go into the next week, which is, you can see in that little box in the bottom left-hand corner, it tells you where it's getting the seasonal data from. Once we start trading in the next week, which is week 49, those pivots will be locked in stone. We'll have week 49's probabilities, and we'll be able to do more trade plans with that information. But yeah, I am not all too frequently do you see probabilities that strong. What are your thoughts on the CAD Swiss franc? I don't usually trade Swiss franc pairs. My broker's Oanda, and you don't get a whole lot of leverage. Of course, a lot of margin to trade Swiss franc pairs. But I'll go ahead and I'll bring it up for you. You can use FXCM, Oanda. These indicators will work on any chart. Yeah. Now, I don't know what expectation I should have for the Swiss franc. I do know it's a safe haven currency, sorta. It really depends on what's going on in Europe. Oh wow, check that out. So 47.37% of the time, historically, seasonally, over the last 19 years, the top for the week occurs between these two pivots around 64, call it 8, and 65. I'm rounding these little values right here. Now I say 19 years of data because every single year, one sample is taken for seasonal data. And when you look down here, it tells you how many samples you have for the seasonal period. And 19 samples gives you 19 years of data. Let's go ahead and slap on our distribution. And you can see when we include all the historical data to our distribution, it's not totally conclusive. A lot of times you get your top, and I'll hide the pivots for a second here. You very frequently get your top for the week a bit higher. And then you have a small trough that still has considerably a high probability density. And then you have another moderate peak right here. And that's nice. What's nice about this indicator is that it'll actually show you visually, oh, where do the probabilities increase, where the probabilities decrease, and where are they most dense by giving them different color highlights. So for this particular week, let's do a strategy for it. Let's say we moved into this R0.5, R1 pivot point area, and we took a short around this spot here. I'd probably want my stop loss at this R1.5. And this actually lines up with one of the pivot point bias strategies included in this indicator. It's exactly the same if you're familiar with another indicator I made called Wayne's Pivots Pro. The Wayne's Pivots Pro indicator has these strategies where you can discretionarily bias the pivot points to give you entry, exit, and stop loss locations. However, with this indicator, because it has probabilities included, seasonal, and you can load non-seasonal data into it too, it's able to tell you the odds of actually the frequency of those tops or bottoms occurring between any two pivots. So if I now reapply those range probabilities, you can actually see maybe that stop isn't so great when you take all the data into account. But using seasonal data, this seems like a good fit. Let's go ahead and see if we can find a CAD Swissy chart with more historical data. Maybe FXCM has more data. Let's go to a daily time frame, because the daily time frame will load as much data as is available on the chart. We'll turn off this auto time frame and set our pivots to weekly, and that will automatically load the weekly probabilities. And you can still see we have pretty much the exact same setup. Yeah. We can also load weekly range probabilities in here, turning off the auto time frame. And now that we're able to load a significantly larger amount of data, this actually seems to be a more reasonable setup. I'll go ahead and hide the pivots real quick. So this was the setup, the short setup from range probabilities, well, probability pivot points. And this indicator range probabilities says, you know, if you do go kind of past this zone here, this is very low. You have a low density of your tops that occur here for the week. So you're probably not going to find your top for the week on CAD Swiss franc very frequently here, given 40 years of data. If you do have a bearish bias on CAD and a long bias on the Swiss franc, you have those expectations based off research that you've read or economic analysis that you've done on your own. That might be a reasonable spot to value a short trade. And this might be a reasonable spot to put your stop at before you start to experience more drawdown in this spot here. So yeah, discretionary tools, they have their limitations. But I think it's better to stay informed about the shape of the distributions from the data that you're dealing with, asset to asset, than not. We'll go ahead and turn on those auto time frame settings. Look at that. This was the distributions for the month. Yeah, this seemed to hold up pretty well, especially if you were on the more aggressively bearish side of the market. Probably would have had more uncertainty taking a short around that spot right there. But we can go ahead and we can load the weekly pivots in the weekly ranges, and in replay mode go back to this spot and see if there was actually a top that occurred at this spot here. So let's go into replay mode. Let's turn off these auto timeframes. And yeah, check that out. When you had a very strong directional move on the CAD Swiss franc, here is a peak in your probability density with range probabilities. Isn't that interesting? And then it'll automatically load the next week's ranges. If you're using the default pivot points indicator like this, it doesn't work well in replay mode. Watch this. If I go into replay mode and see how we're here at the end of the month, it's currently loading monthly pivots. If I start taking a few steps forward, it kind of starts drawing lines everywhere. It doesn't look good. The probability pivot points indicator doesn't do that. So if I go here, and we can turn off the auto time frame. I mean, I should also note, see how it also in replay mode will update the seasonal data loaded? Yeah. Very, very nice. And there you go, you don't have that weird visual bug with the default version of the indicator. There you go. Probably worth noting, right now it's loading the October data, and the next period is November. And then it loads November and December data. Very nice. Now, based off these pivots, you probably wouldn't be taking those shorts, right? Because look at all these probabilities way up here. But this is why it's important not to just look at these probabilities, because the probabilities don't give you all this extra information about economic events and economic developments. So it's important to have a set of reasonable, rational economic expectations and to know what it is that impacts the assets that you're trading. Because it's one thing to have nice tools that generate probabilities for you, and it's another thing to kind of get left out, hung to dry, when you don't actually understand what it is that you're doing. So hopefully that was helpful for you, Tosh. Yeah, and look at this. It's only sampling 14 years of data here on the 12-hour time frame. I don't consider 14 samples to be particularly significant. I like to have, 20 plus, close to 20. And if I really need more data, I'll go to that daily time frame, which loads all the historical data possible, and I'll manually switch the time frame. So then it will automatically force the indicator to load all that historical data, and now we have 39 samples instead of 14. Very, very good. Let's look at our low data. Right? Yeah, I'm not still a huge fan of this particular shape. You can still see it's kind of bimodal, which is nice if you have a bunch of lows right around here and some lows right around here. For the week, you can see this is where you have the highest density of your seasonal data, where it's occurred between any two pivots, where your low has been for this particular week. So depending on my expectations, I might just be more conservative and target this low, probably just below that S0.5 weekly pivot, around 0.644. Or if I'm more aggressive and I'm expecting more significant strengthening of the Swiss franc, might be targeting this area below the S2 pivot. Call it the higher end of the 63 handle range. All right. Let's go on to some more G7 FX pairs. Yeah. I do have more bullish expectations for the Australian dollar because of what I mentioned around their central bank being more hawkish. Also, if China continues to simply not implode, the Australians and the New Zealanders could be beneficiaries of that positive sentiment around China not imploding. All right. So I'm looking at these probabilities here, and I'm noticing it's probably a guess to figure out where you top out given the seasonal data on Aussie dollar this particular week, given 21 years of data. You can see all these odds are quite similar to each other, 23, 23, 19. And when you look at the bar here, it's flat. But what's interesting is that you have these gaps right here. So these zeros mean that in the last 21 years, the top on New Zealand dollar has not occurred between this R1.5 and R2.5 weekly pivots during the 48th week of the year in the last 21 years. So I have a particular term for this. This is what I call a probability gap. And one way to look at this is if price were to move past that R1 pivot, I think it's reasonable to assume you could go to these higher probabilities closer to this, let's say, R3 pivot, around the 67 price. And that would be a good move. That'd be more than 100 pips from the current price here. However, that's conditional, right? If price crosses that R1.5 pip, you're in these low zero probability areas. Now, this is 21 years of data, and there are charts like FXCM that include more historical data. So let's see if this gap still exists, or if it has a significantly higher frequency of occurrences when we load more historical data into it. And look how quickly that loads. So you have some gaps up here instead. You have more centralized tops that occur between this R0.5 and R1.5 pivots. But again, once you move past this R1.5, these odds are all fairly small. They're fairly, what I'd say, uniform. They're not exactly uniform, right? They're all slightly different values except for these 5.88% values here. But I treat them, this whole range here, effectively as uniform to kind of protect myself from over-interpreting some significance to a particular range of prices. So I would treat this whole area here as once you cross this R1.5 pivot, you're more or less playing a guessing game as to where the top could come in. This is probably where range probabilities could be useful. All right, let's go ahead and hide that so it's a little easier to see. All right. Well, if there's any bears on the Aussie dollar, if there's any counter-trend traders who are particularly bullish on the US dollar, they might have taken their shot to go short right around here and put their stop in this trough where these lower probabilities are. So then if price were to cross this area here, they can step out of the way in case price does go to this higher probability area right here. Around 66. I'm gonna put on the probability pivot points one more time. Yeah. Data including all weeks definitely does look different than the seasonal data here. Definitely. So this is where you figure out if your seasonal expectations are reasonable. I'd say in this particular case, I would stick with range probabilities for this week. Yeah. And then if we were to cross this R2 pivot, I would not be surprised to see the 67 price hit. But that is particularly strong directional move. One more thing we can do is we can look at the closing data. And this is saying most of the time you end up closing sideways. Most of the closest for any given week usually occur in this area around the open. And if we use the seasonal data, yeah, that lines up with the data given. Yeah, you can see the overlap quite clearly there. So on a closing basis, if there's a strong swing to the upside or to the downside, I might be interested in buying or selling that high and taking the trade back to the close, kind of like a mean reversion. One more thing I'm going to look at here on the Aussie dollar is the seasonal forecasts. All right. Not particularly strong seasonal data. Probably over here. I believe that is the... Yeah, this is about the second week of December. There seems to be some more seasonal bullish movement here. And then towards the beginning of next week, there's some more bearish seasonal movement there. But the net expected value is generally flat in the beginning of December. And then swings quite a bit, positive and negative, going out into the middle of December. Let's look at one more chart. Let's look at New Zealand. And let's bring up our range probabilities. Quick little refresh. We have more significant peaks. The peaks are definitely far more clustered here. Yeah, so if I was looking to be a bear, a very aggressive bear, might have shorted right at the open. But I'm not a particularly aggressive bear. Those aren't my expectations. Let's go ahead and pull up the seasonal data. Well, we're currently looking at closes for this particular week over the last 21 years. And it looks like there's a bit of a bullish skew to closes on the New Zealand dollar for this particular week. Let's see if this holds if we load more than 21 years of data into it by checking out the FXCM chart. And it doesn't seem like that holds. So if we're just sampling the last 20 years of data, there's a positive seasonal drift where the closes occur towards the end of the week. But when you include the last 50 years of data, effectively going back to the 1970s, seems to be more flat. Seems to be where most of the closes occur around the central pivot. Let's go ahead and check out the high data. Yeah, it looks like most of the tops occur right around here between central pivot and R1. And you get a few tops that occur between R1 and R2. I'm kind of interested to see what the truncated 21 years of data look like. And it's definitely more skewed. Alrighty. Alright. So now looking at this chart, if I had more bearish expectations for New Zealand and more bullish expectations for the United States dollar, I'd probably be okay with taking shots on the short side around that R1 pivot, which is roughly at this peak in the range probabilities distribution right there. And that seems like a reasonable stop. You're putting it in a trough where very low there's a very low probability getting your top for a given week in this zone right here. Yeah. So I'd probably be more open to taking that particular shot if I wasn't so bearish on the US dollar, and if all the expectations on the research for the US dollar weren't so bearish. It's a big consideration when you're doing discretionary trading to look at what other market participants are doing, what other traders are doing, where they think certain economies are going, and how they're forecasting certain assets to move. So then you generally understand the expectations of other traders. And then when new information comes out, you can intuitively understand, okay, with this new information, I probably need to become more bearish or more bullish, or maybe the information doesn't change your prior set of information all that significantly. And there are tons of very advanced automated trading systems that do this. Putting those into TradingView and PineScript isn't the easiest thing in the world to do. But those systems are to remove the discretionary aspect of making those decisions around expectations and then having some discretionary way of figuring out different valuations of where to anticipate tops or bottoms, right? There's all sorts of ways to try and value where a top or bottom is likely to come in at. But I prefer having actual probabilities from the data that I'm viewing. Now let's go ahead and load up the euro dollar. and the FXCM chart to get as much historical data as possible. There's a particularly strong peak right there. So if I'm a bear on the US dollar, that particular peak looks interesting to me as a target. It doesn't help that the PMIs that just came out for Europe were not super strong. Yeah, and you do get quite a lot of your lows down here. What does our low distribution look like? Oh wow, we have a peak right around here. I wonder how that looks on the truncated data from Oanda. Well, the seasonal data gets a bit skewed, but the range probabilities data looks like the sample, the 20 years of data we're sampling for range probabilities, fits with the 50 years of data we got from FXCM. So yeah, if I was expecting any sort of pullback on a bullish Eurodollar view, I might be interested in taking a shot on the long side, maybe around this S0.5 pivot. Probably see it clearly right around there. Well, hopefully this was insightful on a few currencies you guys were interested in me checking out. I'm very happy to see that the streams are very much alive and people are coming in and viewing and watching and enjoying this stuff. Remember, if you want to try out these indicators, it's free to try out. Hello, NASCAR. Hello from America. What has the small cap market been like in New Zealand this year? Actually, you know what? I have been reading. I try and FYI, I read a lot of research from a lot of institutions. And as far as the equity market in New Zealand, from just what I can recall, it hasn't been spectacular, but I think they've seen some growth fairly recently. I don't know what the ticker is for the New Zealand stock market, though. Hello, Summer. Nice to see you. High fives. But yeah, I'll stick around here, and if you guys have one or two more chart requests, you can ask for anything, not just FX. These indicators will work on any chart, so we can do analysis on whatever. Let's see. Yeah, I do not have the New Zealand stock market here in my equity indexes. I have Japan, the UK, Germany, Europe, Australia, France, Japan. Right now, everything looks like it's opening up red except for France's stock market. Ooh. Nvidia not looking so hot right now, huh? There was a bit of analysis by Mark Meldrum in his latest weekly outlook. He had a segment on Nvidia, and I haven't got to watching it yet. But I'm interested to see what he has to say. Let's load up the next period's range for these indicators. So I would not be surprised if Nvidia traded at the 1440 handle here next week. If this bearishness extended significantly. I don't really have an expectation for why that would be, but at least I can see that is a possibility. And also pull up the... Might be a good buying opportunity though. Not many closes for that week occur down there. Looking at the seasonal data, it seems like most of the time Nvidia, for the week we're about to open in tomorrow, you get your low around, call it 470. And let's look at the closes. So let's say there's a long right around here. Yeah, those closes aren't particularly fantastic. You do have a nice large amount of closes that are in this area here. These values are bigger than these values right here. But it looks relatively flat. We only have about 24 samples. So we'll see what it gives and on what day it gives us a low on Nvidia. We'll see. All right. Well, with all that said and done, I hope you guys enjoyed the stream, the bit of week ahead analysis here. We did some FX, we did a stock, we did Nvidia, and we kind of walked through some more interpretations with range probabilities and pivot probabilities. The link to the Discord that I run is in the description. That's free to join. And you can try out these indicators for free, 10-day trial. Plus there's a Black Friday sale. If you plan on purchasing these things, 20% off lifetime on the subscription when you do get it. So, thank you guys very, very much for watching. And I'll see you guys in a bit.